Hi guys, welcome to the Silver Report. It is January 12th, 2017. It's 8:29 a.m. And silver currently right now is trading at 16.92 a troy ounce. And so I wanted to talk about a couple factors that are playing in right now, and while we could see some short-term gains. Number one, on the week, silver is up 1.8%. And that's 5% on the year so far, which is an anomaly, and we see some cracks breaking through in their system. We talk a lot here on this channel about the suppression of the price, about the suppression of all these things, and we've seen a significant dollar value increase since the election. A lot of confidence is going into the United States economy. A big thing to look at is that we're increasingly operating on a global scale. Some of the things that they're talking about is, this border tax on the United States border on imports. Now we have China, which has recently been suffering some major stock market problems. And what we're seeing, China has now risen to being the number 2 economy in the world, and sometimes it borders on number 1 above the United States economy. And so there is a lot of manufacturing taking place in China, a lot of movement of money, and we hear of this border tax. Now, there is a strengthening of the U.S. dollar, but at the same time, in India, there is a significant rise in the valuation of silver. We see the demand for silver continuing to stay strong despite all the skeptics, and it's not something you're going to hear in the mainstream media. And the thing you need to consider is when there's major economic moves, if there would be a 35% tariff put in on all products brought into the United States, it's going to affect these other economies greatly. It's going to affect the economies like China, like India, like Mexico, and there's going to be significant instability, which could mean a great year for silver. It still would keep a strong dollar, but at the same time, we're not the only country that purchases silver. We're not the only country that controls the value of silver. And actually, when you look at those numbers, that is not the real value of silver, because demand is rising. Typically, whenever there's a Fed interest rate hike, metals have not been the segment to be in. So typically, it's not been the safest place. It's known as a safe haven. But we need to consider this, first off. In the first 10 days of 2017, the U.S. Mint has sold 3.7 million ounces of silver in American Eagle coins. By comparison, in 2016, average monthly silver sales in the Mint amounted to 3.15 million. So in the first 10 days, we've sold 3.7 million ounces of silver. So simply stated, demand for silver at the U.S. Mint is already running higher than the monthly average of 2016. So don't forget this. Now, typically we see a big rush away from metals and storing wealth in metals whenever there's a Fed interest rate hike. And we know that it's just not time. It's just not time for a Fed rate hike. And they're just doing this for show, to give the appearance that the economy is doing well, and ultimately they profit from an instability. We know as soon as the economy starts making moves, we see the Dow pushing closer and closer. It was almost there, almost to 20,000, and we see this, and they want to capitalize on that. And we normally see a big rush, and we did see a drop. The silver was pushing $21 an ounce. We saw a great year in 2016, significant gains back from the previous highs. And so it looked like silver was ready to make a jump. We saw the interest rate hike set on it, and we are back down here. We're now currently trading around $16.89. So we saw a significant pushback, but the demand is still rising. I think it's up to 41,000 rupees in India. So around the world, silver prices are rising, demand is rising, purchasing of silver and physical demand is rising, and there's a crack in their numbers. You see, we're at the stage now when the large banks and the large people, the people who control the COMEX, are able to determine the value of a metal, but it's significantly undervalued, just based upon demand at this point, which is going through the roof. Purchases, they're going through the roof. And so even the suppression of the price by this interest rate hike is not really in line with what's really going on. And that's what we talked about yesterday, is reading between the lines, not what they tell you. So now is definitely a time you want to get in before this inflation settles in. We see an inflationary cycle going to be setting in with this interest rate hike. Of course, we see a strong dollar because there's the appearance that the U.S. economy is doing great. That's why they raise interest rates. They want to show we're in this great recovery, this massive recovery. And at the same time, the instability that'll be coming in, this faith in the United States of America is great. It's great for profits, great for business. It's great for these businesses that'll have lower taxes. That's wonderful. But what you don't think about is the fact that when the United States does good, the world has settled into this system where they're relying heavily on the manufacturing and production capabilities of other countries. And so as the United States rises back to its initial economic stronghold, domestically, just by production, and then we will see world markets begin to decline. Europe is up. The manufacturing job posting is up already since the election, and we're going to see a significant alteration of the world's economy. It's going to be unstable. Right now, even though China is producing so much and making so much money, we see there was a couple massive scares on the Chinese market. There was going to be a market correction, a crash, the manipulation that is taking place in their markets. And whenever, if you were paying attention to fears that the Chinese stock market crash was going to, it was causing these massive 700-point drops in the United States. It was going to crash the entire United States economy. So at the same time, when actual production, actual finance, actual manufacturing and commerce numbers are inflated with these false numbers, these manipulated numbers, when they meet in the middle, things can normally turn ugly very quick. And what we'll see is inflation. What we'll see is a lot of these dollars that were printed into existence hitting the market. We're going to see price rises at the store. That'll be the first step. That's going to impact on your grocery bills, and the whole economy suffers when you see this. So ultimately, in the short term, we're going to be seeing some rises in the price of silver and the price of gold, which actually translates to the devaluing of the dollar. So we're going to be seeing some of this fake economy come crashing through, come breaking through, some cracks coming through, as we can already see the manipulated numbers are just not in line with what's taking place in the world right now as far as demand, as far as physical demand, and the paper markets that have been flooded with so much paper metals that are not really in existence. There is so much IOUs, if you will, for silver and for gold that are out there in the market that are not real, and the rise of physical demand, not only by countries, because we will see that we'll see some of these other countries whose economies depend upon distribution of their products in the United States. You're going to see their economies start to tank. Their currencies are going to crash, and their country, their citizens, are going to be rushing into metals. So regardless, this economic stability is the worst thing for the price of metals. Stability, a clear outlook of the danger, even if it's negative. Stability, constant trends are hard hitting on the price of metals. But whenever there's instability, whenever there's changes, whenever, like I said, whenever these manipulated numbers meet fact and reality and empty stomachs, we see violent swings, and we see inflation on the outlook for the United States economy itself. And we're going to see that translate, especially if the economy starts doing well and the interest rates stay where they are. I predict we're going to see them pulling back some from these interest rates that they've set it at, just because it's not sustainable. The economy just can't sustain a rise right now. They want the world to believe the economy is doing so great. It's not. But also we're going to see some of this bubbling up as we see silver's on the move right now. And that's before the American markets even open. So there's some movement in the world. We see demand high. And so hopefully we're going to see some gains coming out pretty directly. All right, guys. Well, this is January 12th, 2017. Thanks for joining me today. This is your economic news but again, if you guys like the content, you like the information, any suggestions you have, leave a comment in the comment box. What you guys are looking into, what you're doing with your investments, what kind of metals are you purchasing. But of course, and subscribe to the channel, guys. There's gonna be more information like this. Hopefully we're gonna stay updated with videos, and so subscribe to the channel, like, share, subscribe, and thank you again for joining me. This is a Silver Report.